Good morning, everyone, and welcome to the European Crossover webinar and happy FOMC Day. We've actually had a couple quiet days in FX land for the most part, at least with the majors, as we go into or lead up into today's day, which really won't not culminate until we get the FOMC decision. And even then, it's going to depend on what Powell says in regards to inflation or potential inflation, and if they want to stick to the everything's transitory. um, it's going to be interesting. I mean, we've seen lumber prices fall quite a bit, but at the same token, uh, we've seen other areas, obviously in the foods markets, inflation stick. But that's going to be what's key and what's going to be what's driving these markets. We did see S&P's pull back as well as NASDAQ after what was a push to all-time highs the previous day, which was on Monday. And I'd share some stuff in the chat room regarding the bigger traders who actually been um, more flat and actually net sellers as of last Friday. And so when we got this leg up, it didn't indicate that that would be a new leg higher. And certainly, we ran up and then we ran out of gas and spent most of the session yesterday on the downside ahead of FOMC. Take a look at economic data. Let's see what's on tap for today ahead of FOMC. So we did get UK PPI data, which was out a couple hours ago. Month over month came in at 0.8. Oh, wow. A little bit stronger. Take a look. There's the cable right here. A bit stronger after a good little dip yesterday, which came down to, I think, around 40.30. And then we saw a nice 50 pip rally off of that, or maybe it was more than that. Yeah, it was 40.30, 40.33. So as this thing rally 50 pips off of those lows. And let's see. UK house price index will be out at the bottom of the hour. And then really nothing until after that, until we come into the States. There'll be export building permits at 8:30 Eastern, with export price index also at 8:30 Eastern, and housing starts. Interesting. Canadian will have Canadian CPI at 8:30 Eastern also, so a little bit of data there after all, as well as wholesale sales with Canadian dollar. And then we do have crude oil inventories. Now, generally not something that we hit up too much on, but that being said, we've had quite the run here in crude oil. You can see that it's just been phenomenal. Look at that. We are forming a little bit of a gravestone doji at the moment. But obviously, the big marker for today is going to be the FOMC decision, and to follow that will be what Powell goes in states and what the outlook is, or maybe not the outlook so much, but whether or not they're going to stay on that. There's a lot of talk about whether the Fed can maintain their credibility, and there's actually talk on both sides. I mean, Paul Tudor Jones was indicating it just doesn't follow the general orthodoxy, and then I've actually seen quite a bit of pushback despite his experience, and you can see why. I mean, I guess you can see why is it. Um, there's been a lot, when you even look at indices and how could they be at these highs when there's this and that, and they continue with highs. So even despite many people's, look, we have at 42.65, 161%. despite people's experience, and certainly Paul Tudor Jones is one of the best macro traders there's ever been. People have pushed a lot of that decision or that thought process aside. Um, and certainly, like I said, where you think one of the things I mentioned the other day, I was saying about how old school logic, just doesn't apply to a lot of these markets. And it's true, and I think that's what a lot of people, and you're seeing pushback because like, no, that isn't correct. And so interesting. But with that, we'll go on and take a look at the bias chart today. Now, as I indicated, it's been very, very quiet. So we just haven't simply moved very much. But we're going to get started with that today. And we'll start out with the euro dollar. So the euro continued to meander on Tuesday ahead of the FOMC. Resistance for Wednesday will be 21.71. We have that already in place, followed by 22.26. Now I think it is going to be important that we go on and indicate, the secondary. Sometimes we'll do that with a big event. Obviously, this would be a big event, with FOMC. I think it's going to be key because if we do go on and push to these levels, would it stop? I mean, here at 21.71 would only be essentially less than 50 pips away. Will be the next key level, and that will be coming in at 22.26 here. And once again, these may just be mile markers if we were to see the dollar come under pressure. We'll have to see because the dollar, even when it's been under pressure, it's held up. And we just haven't. There's been a lot of reasons for the dollar to break down when we saw interest rates actually tick down to a 145 handle on the 10-year earlier this week, and we didn't break any lower. So it's holding up overall. Support will be 2061 followed by 2025. And as I mentioned, we're just there's not really a whole lot to speak. I mean, we have, it almost seems like a little bit of a rounded top almost, but we're holding up. And one thing is, as I mentioned, is I'm no fan of the dollar, but it's had every opportunity to break down. It just simply hasn't broken down from the mid 89 area when it's had every reason to break even further. So we'll see how today plays out, but certainly I just don't see a lot of movement here. We would really have to take off in the euro and really have to spell a pretty good hard move in the dollar index going lower. And once again, like it's had every opportunity to fail and it just simply hasn't. Let's go and move into the cable. Now, the cable dipped on Tuesday to 40.33 before recovering 50 pips. Support on Wednesday will be 39.80. Now, if we do get this break lower, we're looking for a test down here. If we get that break lower, we saw the dollar take off. With resistance at 41.54. So really not looking for a whole lot on this upside. And you can see how we came down here. We actually moved up a decent amount. So really only just looking for another 40 pips, and that might even be a bit restrained here at 41.54, but we'll stick with those levels that we went with. So 41.54. Although actually when you look at the cable, it's probably fared a little bit better than the euro. Support, keeping it simple, 39.80. we do get a big solid break. And on to the Aussie dollar. So the Aussie finished slightly lower on Tuesday, opening potential for a further move. Wednesday, support on Wednesday will be 76.32, followed by 75.93 if we really break it lower. And resistance will be 77.63, followed by 78.02. Definitely been trading in a range. And looking here at the dollar yen. So the dollar yen closed with a doji on Tuesday. You can see that right there. Resistance remains 10.27, followed by 10.66. Support will be 9.52. So 10.27, well, 10.28, that's fine. 10.66. I'm going to stick with the 70 right here. I'm not sure how I came up with the 66. But anyway, we'll go with the 70 and 9.52 on the downside. And that's essentially just giving a little bit of space here. Obviously, 957 is key, but just allowing for a little bit of a dip there. And onto the cash dollar index. So the dollar index closed with another doji on Tuesday. You see that? Monday was also a doji. Resistance on Wednesday will be 91.31, followed by 89.69. So we're not messing around here. Look, that's going to be the decision point here, 91.31. Obviously still remains bearish. And support on the downside, 89.69. And like I said, they've had every reason to fail, and it just simply hasn't failed. We've been hanging around this area here, and it looked like 10-year rates were going to move higher last week or the 10 days prior, and we just simply have not been able to go in and do that. So we've held up relatively well. So kind of question if we're going to really break down. I think Powell would really have to open up the floodgates and probably say even more so, and I don't see that happening. Not that, I mean, he could easily be dovish. I just don't think I think in order for us to fall apart in the dollar, he'd have to go wildly dovish. I don't think that's going to be the case. Will he simply reiterate the stance that inflation is transitory? He might, and lumber prices have surely fallen quite a bit. They've fallen 40% for their all-time highs, or highs that we've seen. With that, we're going to move into Bitcoin. And you see, I kind of move things around a little bit. The only reason was when I'm focusing in during the day and I'm looking at the NASDAQ, it's just a lot easier for me to have everything on one screen instead of me, oh, wait a minute, the profile's on one screen, so that's why I've moved the other, where the S&P is on its own screen and then the other charts there, and it's easier for me to kind of keep track where things are here. Found what hopefully is a very good layout for me as far as basically the same thing, just moved everything, kept it together. But anyway, that being said, that's why things look a little bit different. Let's go and move into Bitcoin now. So Bitcoin spent Tuesday restricted to a tight range holding in the 40,000 area. Support for Wednesday will be 39,270. You can see that right there, clears a bell. And resistance will be 41,940. I'm not so sure that the FOMC is going to impact Bitcoin that much. I guess it could provide a little bit of a boost, but certainly a lot of other economic numbers certainly have not impacted Bitcoin or 10-year rates or anything like that. So it kind of is its own animal. So once again, we'll put this for 39,270. And resistance will remain at 41,940. And Amira did mention about palladium, platinum, and silver, and we'll certainly look at that once we're done with the other markets. So thank you for reminding me, Amira. And with that, let's now go and move into the S&Ps. We'll jump back to the other chart. So here we are in the S&Ps, and the SPOOs paired back on Tuesday ahead of the FOMC decision. And certainly you can see here, we're looking at actually a 2 hour, but you can see where they paired back. And we got that extension on Monday to all-time highs, but we did run out of gas. We actually extended that even further in the Asian session, and then we spent the bulk of yesterday just pairing back to try to hang on, and we pair back a little more, try to hang on, we pair back a little bit more. I guess just kind of factoring in what could be obviously the risk for the FOMC. It's actually the first time I can remember in a little while where they've actually kind of paired back. I think, could be wrong, but I think 2 of the last 3 FOMCs, we just see the S&Ps continue to move higher, or at least hold ground. Kind of were a little bit under pressure. But then again, we did make all-time highs on Monday. So resistance on Wednesday will be 42.53. Followed by 42.65. And support's going to be 42.36, followed by 42.08. And that seems a bit wide, but as I mentioned, we could see some pretty good volatility. Let's go and open this up a bit here. And we're looking at full session profile. You can see here that the pop from Monday, that is, full session, comes in at 42.51. So since right around that 42.53 we talked about, with potential for you to push even higher for 42.65. On the downside, see, we had 42.36 and '08. And we're already around there. And then if we push down to 42.08, yeah, a little bit of confluence here, right around that 42.07. So that 42.08 makes sense there. Although it does seem like that 42.36 may be a little bit too close. Then we go to this 42.26, 42.26. There you go. That's more apropos. Let's go move into the NASDAQ. And we did get to new all-time highs on Monday. So right now you can see where this key level support is going to be right here. Huge level, actually. If we come back down here, which right there's at 13,956. There's a little bit of support right there at 973, but I think that's where the first key one is. And I think, like I said, today's going to be potentially a big day where we can see some pretty good moves here, and you have to focus a little bit more on these larger numbers. So right here we've got 13,956, followed by 13,865. And September has been trading a 10 tick discount to June, which some of these numbers are reflected on that. We'll take a look at the profile. Now this profile is full session, not regular trading hours. I could adjust it for that, but I'd like to be able to see where we're at during electronic hours. Taking a look here. Where's that 957? We're talking about 956 here. And let's see here. 865. Well, you can see right here the value area high here and the midpoint here. It's 854. Let's take a look if we see also any kind of $13,806 would be 50% back. Well, no, the high's a little bit too high. There we go. So 885 would be the 38%, so that makes sense with this 865. And then really beyond that, probably down in here like 786. So we are really up here. We're going to have to see how we play this out. And once again, if we do see some follow through, I mean, if we do see the downside tested, that's where you'd see some forward follow through going through into Asia. So be careful trying to pick this thing up unless I think we're going to see some movement where maybe they try and push them back up and then we dip back and then we might hit some, maybe they dip and then we push back up and they quickly fail and they dip again and then maybe even dip some more, but we shall see. But at least initially 13,956 almost seems too close. Let's go with just below that area right here. 13,935. And to be followed up with we'll play it on that line, but we'll call it 13,826. But I think you have to be careful today. There we go. Now let's go move into the gold market. So gold traded quietly ahead of the FOMC. Resistance for Wednesday will be 1886, followed by 1903. With support at 1842, followed by 1832. Now take a look at go a little bit closer. Here's where I'm coming up with that 1903 right there. Right there, 1903. And 1832 has been pretty key, previously was key. 1832. Didn't even notice this. We still have that, I guess, VWAP from the lows from April. And that VWAP comes in at 1825. But you can see 1832 there. See that right there? What's your current with 1832? The levels are clearly defined, so I don't think we can do that. Pulling up the profile is going to make that much difference on it, especially with the moves I'm going to see today, or I believe the moves we'll see. So we're looking at 1886. Here's just 1884. Let's pull this back here. This 1884 right there. And of course back up to 1903. But 1884 seems more solid in here. There's always a little bit of an overshoot set. 1886 is okay. But with the wild volatility we have today, or I think that we could see today, not so much focused on the profile. Let's go move into crude oil. Now, crude oil, I mean, every day is a new high. So, I mean, where are you going to pull these numbers out of? I mean, seriously. So crude oil made another new high on Tuesday. Resistance for Wednesday will be 73.15. Now, I was looking back over the we'd covered earlier in the week. The next key weekly level is going to come in at 74.20. And actually, I think that's really on a monthly chart. So what I've done is just gone with 73.15. And that's if we hit some stops. I mean, we're a bit stretched, but we've seen that before. And I'm talking about right now. So maybe we gun some stops, they take out 73, and then they fall back. So 73.15 was supported 70.88. So a little over $1 lower here. And if they jump up there and squeeze, knock out some stops, 73.15. And a mirror one to take a look at platinum. Well, we're just still hanging around these lows. We haven't done anything. Key is right now to defend that 1129. And really, we're just kind of languishing here in these lows. This market needs to get above 1198 to take away or to quell the selling. I mean, we're hanging. We haven't seen more selling, but we're just not picking up anything. In order to try and get some upside momentum, we need to get above a daily. We need a daily close above 1199 just to stop this. Cedric was asking about where to charge you with the blue, gray, red, and small blocks. Yeah, we'll get to that. Okay, sure. Let me finish a mirror. Sorry, I just saw that. And that's on the platinum. Let's go and take a look at the palladium. Palladium. Okay, so same thing to a certain extent, acting like platinum. We're just languishing here. You can see we're holding now. We are holding above 2750, which is good. We get a daily close below 27.24, and then it's Katie bar the door because we're going to fall back down here into the lower 26s. And same thing here. We need to get above 28.11 to really get some things kicking to the upside. And then lastly with silver. Silver, we're still holding up, but really to establish a new leg up, we need a daily. We've addressed this before. We need a daily close above 28.41. But we're holding better than platinum palladium are. But you can see here we're just trading that range here of 27.52 to essentially 28.29. Well, that's what we're going to need to do. So not really making a whole lot of movement. Amir says the S&P looks like a head and shoulders on your graph. Let's take a look here. Hold on. Yeah, I noticed that actually yesterday. I was like, but I noticed it when it's still incomplete as part. But it a little bit it does. But when you look at it and the ranges we had, if you look at this right now, you'd say, yeah, that looks like head and shoulders. but it's not defined. Like, let's say that we jumped out to, like, I'll give you an example. Let's say from here, if we're looking at that one, look at this area here. We formed the left shoulder, and now the head's way up in here. You see what I'm saying? So it's just like, it's in a very, very tight little area. You see what I'm saying? One of the things I did notice that I had was this 4265 on 161%. I'm thinking, like, where the heck did I get that from? This big, huge area from here. The only thing I'm thinking is from here, and let's go in, and which is not going to carry as much weight. Let's see here. Let's pull this here. See, now if it was this one, that'd be huge, and it's not. You see that? This that hasn't even reached 127% extension. That'd be huge. But really, it's gonna be more about what happens with what Powell says. Okay, that's where it's coming from. This most recent high here at the end of May, which that's important. To the most recent low on June the 3rd. And 42.59 would be. But it's going to be more about what happens with Powell today. I wouldn't be surprised if we come back up, whether it's S&Ps or NASDAQ. I don't think we'd come all the way back up here, but I wouldn't be surprised to see it move up, let's say towards this 42.50, and then end up rolling down and keep on going down. I'm just saying, it wouldn't surprise me. He says, Cedric says, what type of charts are you using with this blue, gray, and red small blocks insert without? Oh, that's a profile. So yeah, that's hang on a moment. Okay, there we go. So with the profile, each block might be even easier on looking at it on the NASDAQ, but that's fine. Let's go and see if we can. Oh, because holding this area here, so that's what's going on. There we go. That'll make it a little bit easier. So, and the profile, and let's take a look at it'll probably make it easier if we look at regular trading hours. That's why you're not seeing anything today, because we're not into that session yet. Here's yesterday's, okay? So what happens is when the market opens up, you get this first little blue line here. This blue line here is going to be the initial balance area, which I showed for the first hour. And when the market opens up, what happens is I don't have a lot of time to go and explain that, but each bar, if you see these letters, and let's go and make it full session. Might make it easier that way. And this is going to be, right now when I'm showing full session, it's going to be from the opening at 5 or 6 p.m. Eastern time until it's going to go all the way through this next day. That's why we've got bars here. When I put it on regular trading hours, there's nothing, because regular trading hours are going to start at 9:30 Eastern. But as you can see here, is each box is going to be. I guess I'm trying to explain it the right way. When the market opens up, here's the open right here. You see the little green bar here, and the initial balance area is going to be the first hour. Now, of course, this is during the electronic trading hours, and it's going to look over the course of each marking over a half an hour. So you can see here for the first half hour, you can have the A's, AAA. So you can see where the market traded from. If you look here, the low was right there at 1860, and the high for the first half hour, and that's the A's, is going to be 1860.61, and the low was there, 1860. So actually, it was a pretty quiet session, but everything was pretty quiet. So the next half hour is going to be the B's. And what happens is what you're looking for is you're looking at this as kind of like a distribution. You can see here was the market widens out, and the red area is going to be, and like I said, I don't have enough time to go and explain here. It's going to be what's referred to as a point of control here. And the gray area, this is so far, if you were to consider if this was the entire day, we'd say, okay, here's the entire range of the day. You can see here that the most time that was spent trading here was the point of control. That's what they're calling the point of control. If you look on the volume side, there's what they call the volume point of control. But right now we're just looking at the POP, which is going to be the time price, what they call time price opportunities. So as we look over here, you can actually, if you get used to looking at it, you can see, okay, well, and some people will actually trade it from certain sessions. Like there's one gentleman that trades during the day that will look and do a lot of things in the M session. Of course, that's under regular trading hours. But as I mentioned here, if you look here, when the market comes back up, let's say that the market was rallying. Right now, we're trading at, hang on a second. Over here, getting confused. Well, right now we're trading at, I was looking at the S&Ps. But on the NASDAQ, we're trading at 14,000. Hang on. Oh, no wonder I'm looking at gold. No wonder I'm going bananas trying to figure out what the heck's going on here. Hang on, let me switch this back to, or switch it to S&Ps. What else? Apologize. I was thinking, like, why is these? There we go. Okay, well, here's the S&Ps, and right now we're in the current session here. And as I mentioned here, is generally a lot of people only look at the regular trading hours, which is during the pit, what they call the pit session. But I do like to encompass them both because I like to see what's going on. Where are we at in the, what they sometimes refer to as the overnight session. But right now, if you're looking at this, you can see the most amount of trading has taken place. What they call the POC is right here at the 42.37. You can see here that the market opened up. Here's the little green marker right there. The market opened up right at 42.38. The low of this range here on the initial balance, which is the first hour, was 42.36.75. But as we're looking, and let's pull this out right here. So when I'm looking here, that might make it a little bit easier. If you look here from the previous day, and that's going to be considered what's called, and I'm all over the place on this, but it's going to be considered a double distribution. So you had almost like a bell shape, okay? So if you've taken statistics, you can see here the market reached its peak right here. You're going to find the most amount of value, the most amount of trade that takes place here, which is going to be the top part of the bell. And we got actually a double distribution here throughout yesterday's entire day, which included the electronic session. Okay, get this rid of this. Okay, so and so what I do also plot on here is the midpoint. That gives me an idea, like where's the market, in relation to where the market's trading. Sometimes if the market rallies back up, I'll be looking, okay, so we'll probably run into some resistance or support as we move in towards the midpoint. As I mentioned, lots of times what I'll also do is I'll look at what I call the value area low, which is essentially going to be about 70% of this entire range. And this will be the value area low, and this will be the value area high. But the good thing about looking at this is, and generally I look at it from a more of a stand away look, is I'll look to find out where is value going to be. And what I do is I try and look at not only the point of control from previous sessions, but I'll also look at the value area high. You can see here we had a double distribution in this area too. So something when I look for the market to go in and break, just as I was looking earlier too, I'll look and say, wow, you know what? Maybe that we're looking at probably something a little bit closer. I'm looking down here, probably right here. And when I look here at 42.23, I've got the POC from a few days ago here. I've got the lower end of the range, which isn't too far from the value area, and here. So what I try and do is basically find confluence. But during the session, as I said, during the session, and you can see here, it's so quiet because we're not moving very far because it's ahead of the FOMC. But during the day, as these markets trade back and forth, I will be going and using that in conjunction with some of the other things I'm looking at to get an idea of where I might find, because where I'm going to find the most uh, volume slash value area when this market rallies up and thinking, okay, well, we're rallying back up to the point of control. If I'm long, that'll be looking like, well, I might start to, exit, or if you're long and holding multiple positions, you may take some of that off if you're looking for the market to continue to move higher. But today you can see it's very quiet trading here, trading in a very tight range ahead of the FOMC. And so when I was looking at, hey, where could we go to? I'm looking at yesterday's full session point of control. And remember, that's where I've got I actually put the bias chart resistance right here at 42.53. And I'm looking at yesterday's full session point of control right here. And you can see that comes in right there at 42.51. So I'm thinking, okay, well, same thing in that area. Where do I look for the market potentially to go in and run into some, in this case, is going to be some resistance. And I'll be kind of using that in confluence with, let's say, a couple other technical levels I'm looking at. Like I say, well, maybe another day when we have more time. I've referenced uh, the profile chart before, but another day when we have more time, maybe we'll be able to go and focus more time on that. But once again, like I said, I'll look at different areas. But at least for today, I'm thinking, I think they may try and push back up in here, but I don't really see them being able. Like, here's another example. I mentioned the 42.53. You see right here, this was the last close up in here, 42.50 here, right there, the last bar up in here that we closed at. So once again, like I said, on a rally back, to me, I'm thinking if we do rally and back, I think we're going to run out of gas somewhere in here, around this 48 to 52 area, if we do rally back. And I think the market may get tired. Now, that being said, I have no way of predicting. I'm just looking to see how the market reacts. Obviously, Powell does start to acknowledge things. I don't necessarily think he will, because we've already seen lumber prices come back down a bit. So I think he's going to stick with his transitory line. But it's always good to have at least two, if not even three scenarios on how you think a market might react. And then you see whether or not it fits. That way, okay, it looks like it's going to fit this scenario, you can go with that. But yeah, that's just one of the tools I go and use, but I do like it. It's found that there's several areas I can pull from this, not only the way that the POC or the profile is playing out, but looking at different areas. I can look at the value area high, which is the top of the value area low, and well as the point of control. And I'll look at previous days profiles, and that'll give me an idea of where the market may want to move to. More importantly than that is where I look for the market to move to, where it may want to gravitate to, as far as looking at potential targets. Anyway, with that being said, we'll go and call it a day, and thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.